It is another Thank God Friday to the start of the weekend, everyone. I am Melissa Enoch here at the NGX trading floor in Lagos.
And I'm Grace Abaragu. It's the 10th of July. We thank you for joining us at this time on the show.
All right, let's tee off with news now. The International Energy Agency has warned that an escalation of the US-Iran hostilities could disrupt its forecast of a large oil market surplus in 2027 as supply recovery depends on stable flows through the Strait of Hormuz. The agency said global oil supply rose by 4.1 million barrels per day in June after the strait reopened, but remained 9.4 million barrels per day below pre-conflict levels. The IEA projects global oil supply to increase by 7.5 million barrels per day in 2027, creating a potential surplus of 4.62 million barrels per day, but said a lasting peace agreement is essential for market normalization. In Uganda, the Ministry of Finance, Planning and Economic Development has held its Q1 full year 2026/2027 press briefing to review the country's economic performance and government priorities. The briefing focused on fiscal management, economic growth, public finance, and implementation of key development programs. Let's now listen.
In line with the fiscal consolidation, the HY1 expenditure has been programmed in line with the expected cash flows and timing and capacity to access external financing. Therefore, the following principles have been considered in programming the expenditure limits of the first quarter I'm going to give you. 1. Maintaining fiscal discipline by ensuring that expenditure commitments are aligned with the available financing and the approved fiscal framework. Number 2, directing public resources towards high-impact interventions that promote economic growth, job creation, and improved delivery of public services. 3, promoting efficiency in public spending by limiting non-essential expenditures such as workshops, travels, while protecting priority programs and strategic investments. 4, sustained financing to wealth creation and highly critical priority actions within the ATMs. 5, the need to sustain investment in the enablers of growth, particularly security, infrastructure, and human capital development.
In other news, the Nairobi Securities Exchange is pushing to allow savings and credit cooperative organizations to list on the bourse, a move that could bring more than 7 million members into Kenya's capital markets. The proposal would enable SACCO shares to trade on a regulated exchange, improving price discovery, liquidity, governance, and transparency while providing members with a more efficient exit mechanism. The plan requires regulatory reforms as current law does not allow SACCOs to list on the stock exchange, with discussions underway between regulators and industry stakeholders. Meanwhile, the Bank of African States has joined the Pan-African Payment and Settlement System, PAPS, expanding Africa's cross-border payment network and advancing financial integration across Central Africa. BX participation brings the 6 CEMAC member states, Cameroon, Central African Republic, Republic of Congo, Gabon, Equatorial Guinea, and Chad into the PAPS network, strengthening its reach across Francophone Africa. With the addition of BEAC, PAPS now connects 28 African countries, more than 190 commercial banks and fintechs, as well as 16 payment switches, supporting faster and more efficient intra-African trade payments. Meanwhile, the United Nations has launched the SDG Report 2026, reviewing global progress towards the 2030 Agenda for Sustainable Development. The report highlights key challenges and priorities in achieving the Sustainable Development Goals, including finance, climate action, and social development. Here are excerpts.
This year's report tells both stories. First, let's have a look at the story on the progress for human dignity in our societies. Since 2020, the global unemployment rate has seen a steady recovery, dropping to a record low of 4.9 in 2025. In the last decade, nearly 1 billion more people have had access to drinking water. There are increasing numbers of women in our parliaments, in local governments, and on boards, nearing the 30% target, about 27%. 9 people in 10 now have access to electricity. Children under 5 are surviving who a decade ago would not have done. 34 countries have already met the target of under 5 deaths. AIDS is claiming a third fewer lives. More people than ever have something to fall back on in terms of social protection. And almost 3 in 4 people now have access to the internet, up from 2 in 5 in 2015, evolving rapidly. These successes show us that real progress has not only been made, but it's been made because of the political will, the sustained investment, and international cooperation around a framework that is working, the SDGs. We also know far more than we did in 2015, thanks to an important enabler, data. We measure more, we measure better, and with greater precision than we've ever done. And what the data shows is that progress has not reached everyone everywhere. Those gaps now risk widening as the world faces serious headwinds. And this is the other part of the story that this report tells.
Finally, on News Now this Friday, Morocco's central bank, Bank Al Maghrib, has cut domestic electronic payment fees, capping interchange fees at 0.15% for small merchants and e-government payments to encourage greater use of digital payments. The central bank also reduced the general cap on domestic interchange fees to 0.50% from 0.65%, lowering the cost of card-based transactions for businesses and consumers. The measures form part of Morocco's broader efforts to promote cashless payments, modernize its financial system, and accelerate digital financial inclusion. I am Melissa Enoch, and that's it on News Now this Friday. The show returns shortly after the break, with Grace giving us our market rounds. Stick around.
Yes, because some of those initiatives, absolutely correct, they've come as a result of data-supported recommendations. Others, not so, largely because we also, in the course of the last couple of years or so, we've had our own issues to deal with frontally. So it has left a little time to interface the way we would have liked. Having said that, I think there's a lot of progress that has been made. Relative to what it was 2.5 years ago, there's a lot of progress that has been made. And I believe that there is scope for that to continue. One good thing, which I'm sure you know about anyway, is the fact that the Fiscal has 2 members of their management, of the leadership, on the board of the central bank. That is the Accountant General of the Federation and the PAMSEC Finance. Both of them are on the board of the central bank. You also have the PAMSEC Finance, who is on MPC, and that's very important. Because as you know, the whole journey of tightening has been one that sort of impacts different groups in different ways. But I think being able to have open, frank dialogue has been able to help in no small measure to carry everybody to the point we have been at. So I think that has been very positive.
That would happen within the context of the African Union and the leadership of South Africa, and I do not know whether that discussion has happened or not. But I'm very, very hopeful that the matter will be dealt with, at least from the perspective of law enforcement, that citizens in South Africa, whether they are foreign nationals, documented or undocumented, and South African citizens, that they will be protected from these attacks, and that the law will be upheld, because the problems of South Africa are not caused by Nigerians. The problems of South Africa are not caused by Congolese. They are not caused by Zimbabweans. The problems of South Africa are domestic. Even if all foreign nationals in South Africa were to leave, the problems would remain. So it is a fallacy to suggest that the problems of South Africa are caused by foreign nationals. They are not. On the contrary, Africans in South Africa make a very positive contribution, primarily to the economy, to the cultural diversity and the cultural richness of the country. All of these are very positive attributes which we should be proud of as a continent.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for reports on how the markets wrapped up this Friday. Hello there again, Grace.
Thank you, Melissa. Let's now take a look at how the markets traded today, starting off with the equities. The Index All-Share Index advanced 0.05%, while the BRVM in Abidjan gained 0.87%. The Nairobi Securities Exchange rose 0.58% to 229.05. In Southern Africa, the Johannesburg Stock Exchange advanced 0.76%, while Mauritius Semdex gained 0.48%. Finally, in North Africa, Morocco's MASI rose 0.32% as at 1426 GMT. Finally, let's take a look at the soft commodities. Cocoa tumbled 7.71% to $5,957. Coffee dropped 6.78%, while cotton edged up 0.16% to $80.76. Palm oil slipped 0.30% to $1,311.23, and sugar fell 2.05% to $14.81 as at 14:18 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you for those market updates. And that's it on today's edition of Money Moves. From all of us here at the NGX Trading Floor, we say thank you very much and do have a splendid weekend.